If you know me, I'm always talking about house hacking and how you can get into your first house by taking advantage of a FHA loan. But what are the requirements for this actual loan? I've been getting a lot of questions about it, so let's get into it. What's up? I'm Brandon Young. On this channel, I teach you how to make, save, and invest money. So if you're new here, consider subscribing and don't forget to hit that bell so you don't miss a beat. Now, first, we want to start off with what an FHA is, which essentially is Federal Housing Administration. They're going to have different types of requirements depending on what type of loans that you have. So you have your FHA, you have your conventional, but the things that they ask for are quite different. So let's get into that. Now, FHA loans are usually more popular amongst first-time buyers, not because you got that low down payment, but they tend to be more lenient with your existing debt as well as your credit score. Now, first thing we're going to talk about is the exact credit score that you need to actually qualify for an FHA loan. I know a lot of us have been through things where our credit score might not be the best. Well, lucky for you, the minimum score that you need to qualify for this loan is a 500. Yes, a 500. If you have a 500, you do qualify for an FHA loan. However, you want to bear in mind that FHA, they set up these guidelines, but the FHA lenders may require you to have a little bit higher credit score just so they can mitigate their risk. So it's always great to have a higher credit score because it's going to make sure that you don't run into problems, and why not have a great credit score? Just another thing that I want to add, it's always better to have a higher credit score as well, as it's going to decrease your rate. The lower your credit score is, probably the higher rate you're gonna get. So you always want to make sure you have a better credit score because it's going to allow you to get the best possible rate that you can get. Now, the most attractive thing about FHA is hearing about this 3.5% down, which may not always be the case. Let's dig deeper into this. Your credit score is going to be a huge factor in how much you have to actually put down. So if you have higher than a 580, you will be able to qualify for this 3.5% down. If your score falls between 500 to 579, you are going to have to put at least 10% down to qualify for the FHA loan. So just bear that in mind. It's always great to refer back to the first one where I said it's always better to have a better credit score because it's going to help you in the long run. Now, another thing that's heavily slept on is going to be the debt to income ratio, which you want to always keep below 50%. Now, it doesn't really matter which type of mortgage that you get. Lenders are always going to look at your debt to income ratio, but with the FHA loan, they're going to tend to look at two things. They're going to look at your PTI and your DTI. Your PTI is going to be your payment to income ratio, and your DTI is going to be your debt to income ratio. Your DTI basically compares how much you make to how much you are owing each month. Specifically, it is the gross amount of money that you're making each month that goes toward your mortgage, your rent, your expenses, your credit cards, etc., etc. Now, you want to keep your DTI as low as possible. If you can keep it under 20%, 30%, that is great. But guidelines will allow you to get up to 50%, but you want to keep it as low as possible. Now, one question I get asked a lot is, does it really matter how much salary I'm making? Do I have to be making big bucks to qualify for this FHA loan? The answer is there is no minimum or maximum salary that you need to actually qualify for this loan. You are going to need a couple of things. These are going to include at least 2 established credit accounts. So this can be 2 credit cards, this can be car loans, whatever credit accounts. You need to have at least 2 established versions. You also can't have any delinquent federal debts or any delinquent federal FHA mortgages against you. Just don't have anything delinquent, please, at all. Also, you can't have any cash gift accounts that you're getting from like your friends and family that are going to help you with down payments. You have to make sure whatever cash payments or gifts that you are getting, that they are verified by the actual donor, put in writing so they can put put that into the underwriting process, etc., etc. They want to just make sure that everything is in writing and you're not stealing no money, stuff like that, etc., etc. Now, what documentation is required of me for an FHA loan? You're gonna need a few things. You're gonna need a government ID from your state. This can be a driver's license, passport, etc., etc. You're also going to need a copy of your social security card. You're also gonna need 2 years worth of W-2s, pay stubs, tax forms, etc., etc. Also, like we spoke about earlier, you're gonna need any signed and dated letters verifying any cash gifts that you have been given for the down payment. Now, the loan must be for a principal residence, and one of the owners or anybody who's involved in the actual mortgage has to occupy the residence within 60 days of closing. Now, the property can be a single family home, and it can be a multifamily home with multiple dwellings up to 4, and as well as it can be a manufactured home as long as it has a foundation to it, so much as you are occupying one of the units, specifically for the multifamily unit, because that's why we talk about that house hacking. You want to make sure that you are occupying at least one of the units. Now, this is a big factor because you cannot make it an investment property unless you are occupying one of the units, where then you can basically be collecting rent because you live there and you're getting money. Also, unless you're doing a 203K loan for renovation, you have to make sure that it passes a FHA appraisal, which has to fall into the FHA guidelines just to make sure the house is in good working shape. The property also can't be a house flip, so you cannot buy another property within 90 days of actually closing on this actual property. Now, let's talk about the FHA mortgage insurance, which is my favorite thing. Can't hear the sarcasm in my voice. Now, lenders are willing to offer FHA loans because they know if you, for whatever reason, foreclose on your home, they know that the FHA will be able to pay them back. But who backs the FHA? The FHA is backed by you in the form of a FHA mortgage insurance. Now, you are going to be required to pay an upfront mortgage premium payment, which is usually about 1.75 of the total amount of your loan amount at closing. After that, you are going to pay monthly insurance payments, and boy, do they suck. But never fear, the only way that you can get out of this type of insurance is pretty much doing a refinance, getting out of that current loan and going into a conventional loan. And this is where you can get out of the mortgage insurance. Now, FHA does have a foreclosure waiting period. So if you have previously foreclosed on a home, unfortunately, you're going to have to wait at least 3 years until you can go ahead and get your next home via FHA loan. Although there are certain circumstances where you can pretty much get out of this, most cases you're going to have to wait the 3 years, but there's some cases where like serious illness or bankruptcy can help you to get into a FHA loan a little bit quicker, but no, it's a bit harder. One of the biggest things that comes up is, do you need to be a first-time home buyer to actually get into an FHA loan? Because pretty much people assume this is a first-time home buyer type of loan, and the answer is no. It's honestly a free-for-all for anybody looking to get into a low money down payment, as well as it has more relaxed requirements. If you don't have the best credit score, you're not really making that much money, this may be your thing to get into. I know a lot of people don't readily have 20%, 25, 40, 50% for a down payment. So being able to put that 3.5% down, especially depending on where you are in the world, you may be able to get a house for pretty much the price of a car, depending on where you live. Like in certain cases, if the house is 60K and you only got to put 3.5% down, I mean, you're paying little to nothing, like 3K, 4K, maybe less than that after you add the fees on, but sounds pretty good. Those are a lot of requirements for FHA. I know I kind of sped through that, but if there's anything that you need the answer to, be sure to leave your comment down below so I can go ahead and get back to you. Be sure to go subscribe for more content like this. I'm Brandon Young, and I'll see you in my next video. Peace.